Hi, I'm John Heinlein, CEO and Senior Portfolio Manager at Horan Capital Management. Welcome to our first market commentary video. As most of you know, we typically include the market commentary as part of our quarterly newsletter. However, from now on, we're going to try to communicate this through a short video. In fact, we plan on doing more videos for you as part of our effort to create a more personalized experience. This will give you a chance to see and hear from multiple members of our team, some of whom work behind the scenes for you. We hope you like the change in format and welcome your feedback. Our quarterly newsletter will still include the portfolio activity, which you can find through the link below and also on our website. I will now turn it over to Tim High, one of our portfolio managers, to take us through the market recap for Q1 2018.
Thanks, John. I'm Tim High, a portfolio manager here at Horan Capital Management. Investors became quite risk-averse during the quarter as volatility returned to the stock market. The quarter started out strongly with a continuation of the previous 9 years of stock market gains, but quickly devolved into a tug-of-war between bulls and bears. Those gains were quickly disrupted by surprisingly positive and potentially inflationary employment data that spurred speculation that the Federal Reserve would raise interest rates higher and more quickly than markets had previously anticipated. Later on in the quarter, trade posturing and threats of a trade war by the Trump administration affected markets negatively and continued the quarter's earlier volatility, creating a very noticeable zigzag pattern in stock prices. As a result, the S&P 500 traded down near correction territory for most of the quarter. However, there were differences in the two sources of volatility. One was unfounded, more speculative, and had inflationary undertones. The other was real and potentially deflationary. So there you have it. Two sources of volatility during the quarter, but each grounded in a different reality. As we have previously stated, we think inflationary concerns are overblown. There are no signs of an economy running hot, and inflation isn't showing up in the data. Couple that with deflationary trade news, and we will say the argument tilts away from inflation. Despite the stock market swings, the quarter ended with only a slight tick downwards. And despite the heightened sense of risk aversion, certain areas of the market were less affected than others, including emerging market stocks, high-yield bonds, U.S. growth stocks, and U.S. small-cap stocks in particular. That concludes this quarter's market commentary. Next, we have Louis Foxwell with concluding remarks. Thank you.
Thanks, Tim. My name is Louis Foxwell. I'm the research analyst here at Horan Capital Management, and I just want to reiterate that we take a long-term approach to investing. The volatility and the price fluctuations that you saw during the quarter allowed us to buy some new positions. It allowed us to add to some existing positions as well as sell some existing positions. In other words, volatility created opportunity. I want to thank you for watching this video, and please look for future quarterly newsletter videos. We will also include our portfolio activity so you can see what we bought and sold during the quarter. Thank you again for your time, and please feel free to contact your advisor should you have any questions. We look forward to seeing you next quarter.